again, everyone. Welcome to the Options Mentor. And wow, did the SPX ever have a week? This week went to all-time highs, up 52.61, I think it was. Very, very bullish week. And then took some of the polish off of it there at the end of the week. So heading into this week, there's not a lot of economic news that's already listed as going to be coming out, except for one big thing. And that's this Friday, we'll have the PCE, which is the Fed's favorite inflation number that they like to read. So I assume the market will probably have a lot of movement around that PCE. So I want to show you a trade today that the idea would be hopefully we could put it on a Monday and maybe even be out of it before that number, but you don't have to get out of it because of that number. You could stay in it longer, but I think we got a shot at being out of it with a little bit of profit. You can follow along, for your education and see, trade the thing paper, see what you think. Let me show it to you here. And it would be a balanced butterfly. Now, a balanced butterfly is just what it says. The wings are equal from the center on each side. So in this case, I centered it right around where we're trading. I used Friday's close number 52.34. So I did the 52.30. Then I went up 60 and down 60. So it's balanced in that regard. And whenever you do that, you start out with some short deltas. You can see here about 2 short deltas. And what that does for you is if we actually do go down, you actually pick up cash along the way. And as a matter of fact, you could be up maybe around $50 or so per contract at the lower break even. And if you put this trade on for around $1,000 here, you can see the mid price is 10.05. So you could be up around 5%, even down here at one of the lower expiration break even. So if I got down there, I would just take the money and run. So if we did have a bit of a pullback, sometimes before big numbers come out, it seems like the market does wobble a little bit. We could easily pull down into that 5,200 area or wherever. You might find some support there, but then you could get out at 4 or 5% profit. Who knows, maybe sometimes it works out that these are even a little bit more than that. And if it stays the same, we're still making money. Remember, this is a positive theta trade. By the way, I did it for April 19th. You want to give this a little bit of time. So I went out that far. If you try to do it for like the 5th or the 12th, it just doesn't look as good on these edges. So I went out a little bit further, and you can still have it work just fine, even though you're further out in time. So don't let it scare you that you're, 3 weeks or more out in time. That doesn't mean you'll be in the trade for 3 weeks. That's just where it is and expiration, but you can easily be out of it 5-10% before that as far as this time goes. And then if we look to the upside, that's our give up, right? If it does run to the upside, well, if it runs to all-time highs, the last ones and stalls there, we wouldn't really have to do anything. But if you get up probably 52.75 or so, then you'll need to make some adjustment up here or just close the trade. So anywhere from 52.75 on down, we should be good. You get down in here, get 4 or 5%, especially if you could get it maybe by Thursday or something before that PCE number comes out pre-market on Friday. So it will be before the market opens, an hour before when it comes out. So you can't expect to have that number move and then you'll be able to deal with it immediately on Friday because it comes out before the market. So you could have a gap opening of some sort. I'm not saying there will be. I just think it's something to be aware of. Now, you could go ahead and take it into next week also if you wanted, and maybe try to get 8 or 10% if you could along the way. But that is the balanced butterfly. I'm not sure if I've shown those on here before, but it's certainly, I think it's been a while if I have. So that's just another strategy that you can use in different market conditions. And I think in this market, it looks fairly interesting. As always, folks, I appreciate you coming onto my page and subscribing, or my YouTube channel, and subscribing to it and telling your friends that the YouTube community just keeps growing. And don't forget, there's all kinds of links in the description where you can join me every day over at arimer.com, where I have an opening bell 5 days a week at 8 a.m. Central, which is a half hour before the market opens, to talk about what's going on. And I have a couple traders lounges and help desks during the week where I help you with trades you might be having questions on. And also we look for new trades. That's all there. And as I mentioned here midweek, my brand new revised, updated all put flat fly course has come out. You can also see a link for that in the description. That particular spread, the all put flat fly, which is a unbalanced fly that I set up with certain parameters that I've been doing for about 9 years now, about 8.5 years. And it's been the most successful spread trade for reliability that I think I've ever had. But if you want to learn all that, it really dials into the nuts and the bolts. It's an hour and a half long. I even show you how to do things on a live platform, as well as have a presentation that goes through all the rules and guidelines. How long you're going to be in it? How far out does it need to be? How do you construct it? How do you adjust or repair it? What do I look for in the macro market, for consideration? What are the volatility levels and how do they affect things? All that's there in that course. So you might want to check that out. But as always, I appreciate your attention here. Try putting this trade here in SPX on paper and just follow it and see how this strategy works. And then maybe if it's right for you in the future, it could be something that you could use in your own option trading business. All right. Well, thanks a lot, folks, for coming by. And I will speak with you next week. Have a good one. Bye-bye.